Good morning, welcome. You're watching Market Cafe with Ankita and myself, Harsh, on ET Now. Of course, the first show of the start of the new week. And what do we have to look forward to? How have global markets performed? Ankita is going to take us through all of that.
So Harsh, finally we have staged the first big rally of 2023 on Friday. Now the US markets rallied on Friday. Now this was primarily on the back of two reasons. The first being that the salary growth number that came out to be slower than expected. Now the increase was at 0.3% on a month-on-month basis versus market expectations of a 0.4%. The second reason was that the services industry contracted in December. Now both of the above indicate that the US rate hikes are making some sense as salary is not increasing at a pace at which it was expected and the service industry is contracting, and hence the economic activity somehow is going down, which should cool off inflation and hence interest rates, and hence the market rallied. Now, Friday's rally helped stocks end in the positive territory for the week, which was also the first of the year. Now, the Dow Jones Industrial Average increased 700 points or was up 2%. The S&P 500 ended up 86 points or 2.2%, and the Nasdaq Composite added more than 2.5% in the trading session. Now, if you look at the European stocks also, they clocked their best week since November as investors digested a key Eurozone inflation data that came out, and December's US job report that also came out on Friday. Now, inflation in the Eurozone dropped for a second consecutive month in December, and the headline inflation, which includes the food and the energy costs, came in at 9.2% on a year-on-year basis in December. Now, that follows November's headline inflation rate of 10.1%, which represented the first slight contraction in prices since June 2021. Now, on the back of that, the Pan-European Stock 600 index closed 1.1% higher, with all the sectors in the green. DAX was up 1.2%, CAC up almost 1.5%, and FTSE was up 0.8% in trade. So that was a roundup of US and European markets. What is the crude looking like, Harsh?
Well, Ankita, I'm going to lean on to some of what you said. We're looking at crude currently. The Brent is just above the $79 a barrel mark, and oil prices otherwise, which is WTI, is below the $75 barrel mark at the moment. And mind you, oil's had a torrid week. Oil is in fact down 8% through last week after seeing a 13% rise in the 3 weeks prior. So clearly the tide has turned last week when it comes to crude. But the other piece, of course, as I will continue to lean on what Ankita said, is largely the fact that the US jobs report continues to be strong. Unemployment at 3.5% definitely is a stronger than expected number, and that will mean that the Fed still has wiggle room to increase rates, and that will compress demand, and that's probably putting some amount of pressure on crude, and that will be the order of the day at the moment. We're seeing the ECB also tilting towards more rate hikes going forward, and that will keep oil prices compressed, and that's currently the theme when it comes to crude and oil.
Right, and let's quickly look at the events that you need to watch out for in today's session. First up, the earnings season has just started. We have TCS Q3 earning coming up in today's trade. We also have Mahindra Thar's new brochure that will be released today. So do watch out for that as well, all you car lovers. And we also have Piyush Goyal, who will be visiting the US today. It is from the 9th to 11th of January to participate in the 13th India-US Trade Policy Forum. So he will be visiting US on account of that. We also have the Bombay High Court order on Chanda Kochar and her husband, and we have the Japanese PM who's going to kick off the G7 tour as well. So these are the things that will take place this morning.
Well, yes, but quickly moving on to the top stuff that we need to look out for. One is the US payroll growth decelerated in December, but was still better than expected, in a sign that labor markets remain strong even as the Federal Reserve try to slow down economic growth. Non-farm payrolls increased by 223,000 for the month, more than the Dow Jones estimate of 200,000. Unemployment rate fell to 3.5% from 3.7% in November. Economists say the slowdown in wage growth could be a sign that rate hikes are working. ET Now, of course, spoke with market experts to decode this data. Listen to what all they had to say.
It's a massive boost really for risk appetite in the markets. Ultimately, we do need to probably see a little bit more data before the Fed's going to completely change tack. But at the same time, the wages, as we've repeatedly alluded to here, they are the most important thing. The Fed has very much stated that, really. It's not, they can look through an element of base effects, they can look through an element of energy prices and the jobs numbers. They want to see the economy and they want to see the labor market remain relatively resilient. But it's hard for them to change direction in any significant way if wages are growing at 0.4, 0.5, 0.6% month on month. If we're seeing 6-7% wage growth in 3 months' time, the Fed has a really difficult job explaining why now is the time to no longer be raising interest rates. But as we've just seen, the wage growth number dropping to 4.6. That's a much more modest rate, and that suggests that underlying inflation pressures are subsiding.
My narrative has not been changing for several months now, which is that bond yields have peaked, equities have bottomed, the dollar's peaked, and what that tends to do, although obviously the dollar's been more stable over the last few weeks, what that does, a weaker dollar over time, is pull money out of the US and towards emerging markets. I mean, I'm not running the flag up the flagpole by any means, but EM has started the year comfortably outperforming developed markets by about 300 basis points. It's way too early to get excited about that, but that narrative is in place. And I think in particular, that narrative gets a lot of support from what we heard today. Now, I don't expect the Fed to stop anytime soon. I think they'll probably go, I don't know, 50 maybe next month, or if not 25. They've probably got another 50, 75 to do, but we're coming to the end of that. And as inflation rolls over further, that's going to bring the dollar down, in my view. That's going to pull money towards emerging markets.
And moving on to what's happening in Brazil, supporters of former Brazil President Jair Bolsonaro stormed into the country's presidential palace and Supreme Court. Leftist President Lula da Silva announced a federal security intervention till January 31st. He blamed Bolsonaro for the invasion and complained about fanatics in the country.
Well, and travelers streamed into China by air, land and sea after Beijing opened borders that have been all but shut since the start of the COVID pandemic. China's opening ended a requirement for incoming travelers to quarantine as well. This is the final pillar of China's zero COVID policy.
And Jack Ma has given up control of Ant Group, China's largest fintech firm. The company said Jack Ma no longer holds a controlling stake in the company after it adjusted its voting rights structure. Reports suggest that Ma's shareholding in the company has reduced from 50% at one point to around 6% now.
Well, and Salesforce co-founder Benioff has soon to be the sole CEO said that more downsizing could be coming. He also expressed concerns about productivity in parts of the sales organization. The company said last week that it's eliminating 10% of jobs. During the pandemic and in the years leading up to it, Salesforce had expanded rapidly as cloud adoption soared.
And BMW has pulled the covers from a car that can change color. Unlike the previous model that switched between monochrome tones, the new color-changing skin is applied to a concept called the BMW i Vision D. The car can be adapted to suit your style, your mood, or your outfit of the day, and it only takes seconds to change the design.
Well, and Prince Harry launched a broadside at the King, the Queen, the Consort, his brother, and the royals. The former royal has criticized the palace and his family in his book Spare. He said that his interests had been sacrificed to Camilla's PR altar. He also spoke of royals competing for the limelight.
And at Times Network, we are always looking to create investor awareness and make financial matters simple for our viewers. Now, keeping up with our values, we present the second season of Nivesh Ke Funde. On this edition, we take a deep dive into the world of index funds. Listen in.
The pandemic has seen a number of Indians turn to the financial market to invest their wealth.
Yes, but many have wanted to follow a passive route of investing.
Absolutely, and they have been able to do so by investing in index mutual funds. But Aisha, how does one know if they are investing in an index fund or actively managed fund?
Well, it's quite simple, index funds mimic a stock market index like the NSE Nifty 50 or the BSE Sensex. So your investments are only in the stocks that are part of the index.
And the investments are made in stocks, replicating the same weightage that they have been in the index against which the funds are benchmarked. And since the fund manager just has to replicate the stock composition of the index, the expense ratio is quite low as compared to actively managed funds.
But Nikunj, while a low expense ratio is ideal, investors should also check the tracking error of the index fund before they invest in it.
Yes, a low tracking error shows that index funds returns relative to its benchmark do not vary much, which is a good thing.
Nikunj, another benefit of investing in index funds is that investors get access to diversification.
Right, since the index fund replicates the index, diversification is built into the system.
And if someone is bullish on the long-term prospects of the index, then an index fund is a very simple and easy route to stay invested towards that belief.
Investors can consider adding index funds to their portfolio, but only after consulting with their financial advisor.
That's all in this edition of Nivesh Ke Funde, where today we were talking about index funds. Stay tuned for more such investment insights.
Welcome back. You're watching Market Cafe on ET Now. Quickly moving on to the top stories that one would have to look out for, of course, in trade today as well. Most relevant. Government has received multiple expressions of interest for IDBI Bank as the last date for submitting EOI ended on Saturday. Sources told ET Now that Prem Vatsa-led Fairfax Group and a Japanese bank are among the bidders. Ankur Mishra is here with more details. Ankur.
Yes, multiple expression of interest have been received for IDBI Bank stake sale. We learned that Fairfax Group has submitted a bid for IDBI Bank. Apart from that, we also learned that a Japanese bank may have submitted an EOI for IDBI Bank. Now, as far as the process is concerned, the DIPAM secretary did announce that the process has entered the stage 2. That means the verification will be done by Reserve Bank of India as well as Ministry of Home Affairs, and fit and proper criteria will be checked by the regulator of the prospective bidders. And after that, entering into financial year 2024, the stake sale may be completed. Now, as far as the SEBI approval is concerned, it came before the deadline for expression of interest, which ended on Saturday. And after that, as and when the stake sale happens, government will be classified as a public shareholder, and minimum public shareholding norms will have to be borne by the prospective bidder or the successful resolution applicant, and that needs to be completed within the 1 year of the transfer.
Well, in another twist in Reliance Capital acquisition, lenders have decided a fresh challenger round of bids. ET Now has learned from sources that Committee of Creditors will meet on Monday to take a final call on challenge mechanism with a reverse price of 9,500 crores. My colleague Ankur Mishra is here again to give us more details on it. Over to you, Ankur.
Yes, we learned that Reliance Capital Committee of Creditors is going to meet on Monday, and they will take an important decision on whether or not they need to conduct another challenge auction. Now, why this challenge auction is needed, lenders feel that they want to go for value maximization, which is their goal. And till now, whatever the bids have come, that is below rupees 13,000 crore, which is the liquidation value which they have assessed. And they want that bidders should once again participate. So all the bidders like Hinduja Group, Torrent, Oaktree Capital, as well as Piramal Cosmia can participate in the current round, which is likely to be conducted on January 20. As of now, there is a bidding war which is going on between Torrent as well as Hinduja Group. The latest bid from Torrent came at rupees 8,640 crore, which was on all cash basis, and that was submitted on Friday. And before that, Hinduja did improve their offer to rupees 9,000 crore NPV, but Torrent went to NCLT and they got a stay also. And in an interim relief to Torrent, NCLT did direct COC that they should not consider the offer which was given after the deadline, which was the allegation by Torrent Group, till the time the hearing continues. Now, lenders want that after this new round is conducted, all the participants will get once again a new chance to participate in the auction. Now we need to wait and see that whether or not this new challenger round is conducted or not, and also what happens at court, in which the hearing will continue on 12th of January on the plea of Torrent.
Well, thank you for that, Ankur. Both those updates, keep an eye out for that. But quickly moving on, FY23 GDP data has come through. Rather, the first advanced GDP estimates have come through, and that number has come in at 7%. We were expecting that number anything between 6.8 to 7, so it's come on that higher band of 7%, with the RBI projecting it at 6.8%. Of course, GDP grew at 8.7% last year. Now, when it comes to sector-wise, farm sector is expected to go 3.5%, solid growth there versus the 3% on a year-on-year basis. And when we're looking at mining, expected up 2.5% versus the 11.5% it clocked last year. Manufacturing expected to grow at 1.6% versus the 10% it clocked last year. And construction is expected to grow at 9% versus the 11.5% growth that it clocked last year. Industry growth is expected to come in at 4.1% versus 10.3% last year. And services growth is expected to come in at 9.1% versus 8.4% last year. Private final consumption growth is expected at 7.7% versus 7.9%, and government spending is expected to go up by 3% versus the 2.5% growth that it clocked last year. Of course, the back of better tax collections aiding that number. Capital formation is expected to grow at 11.5% versus almost 16% in FY22, and GVA is expected to grow at 6.7% versus 8.1% last year. Now, to break some of these numbers down, we spoke with, of course, our consulting editor, Maithili Bhushnarmath, and she is here with her take on the numbers.
Well, the government's got some good news on the macroeconomic front going into the weekend. The first advanced estimates released by the NSO, National Statistical Organization, for the current fiscal, that is 22-23. The NSO says the real growth will be about 7%, which is higher than what the Reserve Bank of India's estimate was at 6.8%. Better still, the nominal GDP growth and the nominal GDP number for this current fiscal is higher than what the budget had estimated. The budget had estimated the nominal GDP would grow at 11.1%. The actual growth is 15.4%. Given that the nominal GDP growth is what determines how tax revenues perform and ultimately how the government's fiscal deficit performs, this is good news for the government. Basically, what it means is that government's tax revenues are likely to overshoot the budget estimates, and the fiscal deficit, which is the excess of government expenditure over its receipts, is going to undershoot the budget estimate. As against the government's budget estimate of 6.4%, we could well end the year with a fiscal deficit in the range of 6.1 or 6.2. And that is very good news because it shows the finance minister has husbanded her limited resources very successfully. She's done a good job. Trust a woman to do it.
Yes, absolutely. You can trust a woman to do it. Moving on, as more facts come out and the lapses on Air India's end come to light on the Ping incident, Tata Group Chairman N. Chandrasekaran was critical of Air India's response and stated that it should have been swifter and that Air India fell short of addressing the situation, and claimed a review of every process that led to such a shocking incident would be repaired to ensure such an event does not repeat in the future. The statement was in connection to a drunk man aboard the New York-Delhi flight who urinated on an elderly woman. The accused was arrested by the Delhi police from Bengaluru on January the 6th and brought to Delhi. A local court has sent Mishra to a 14-day judicial custody for now.
Well, and as the holy town of Joshimath continues to sink, the Principal Secretary to Prime Minister held a high-level review of the situation, and central agencies along with experts have extended their assistance to the state government to help prepare short, medium and long-term plans. One team of the NDRF and 4 teams of the SDRF are already in Joshimath and are assisting with evacuation of civilians while ensuring law and order is maintained. Prime Minister Modi also spoke to Uttarakhand Chief Minister Pushkar Singh Dhami amid the ongoing crisis and assured all possible help. Meanwhile, Joshimath has been declared a landslide subsistence zone as of now. Over 60 families have been evacuated. Mohit brings us an exclusive ground report from Joshimath.
It's not raining at this point of time in Joshimath, but the water is dirty given the fact this water is coming from inside the tunnels, inside the mountain, and this is the new source of water that has come up. Every new source of water that comes from the mountain, that breaks the mountain, that comes from the crack, is very, very dangerous for that particular belt. Has been continuously reporting from various parts of Joshimath and showing everybody that how the situation is very volatile. And I'll show you that where exactly I am standing. Now, this water is directly going towards the river Alaknanda, which is on this side. My camera person Harinder will show you the visuals of Alaknanda river, which is coming from Badrinath, which is hardly 32 kilometers from this particular area. So a new water source have come up, and this water is coming from the mountains of Joshimath. Now the locals claim that this water is coming out of the blast of the NTPC tunnel, though the government has constituted a committee that will look into all these aspects. But if a new source of water comes up, it makes the land very volatile. Imagine the apartment over there, the flats over there, the residential complexes over there at the JP, under which this water is coming, and it has become very dangerous to live in Joshimath.
And moving on, Bharat Nirmal Mahotsav at Corn Expo India 2023 will bring together the entire construction industry, contributing towards the future of nation building from January 31st to February the 3rd. The Bharat Nirman Mahotsav vehicle will cover a total of 17 cities across 6 states. Against the backdrop of increased infra development and construction activity in the country today, the purpose of the Bharat Nirman Mahotsav is to identify the industry's heroic individuals and teams who are driving nation building across the various construction sites in North India. The Bharat Nirman Mahotsav team will recognize the efforts of people involved in the construction business, such as builders, contractors, subcontractors, equipment rental companies, and more. The team will also extend a personal invitation to Burma Corn Expo India 2023. Speaking at the flagging off ceremony, Lieutenant General Rajiv Chaudhary, Director General Board Roads Organization, said the heavy machinery and vehicle industry is constantly innovating to improve construction outcomes like higher productivity and resource efficiency. With the vast scale of infra development in the various parts of the country today, the construction industry needs to adopt latest technology solutions for timely delivery of good quality infrastructure within budgets.
Well, yes, and we at Times Network, we're always looking to create investor awareness and make financial matters simpler for you and our viewers. Keeping up with our values, we present the second season of Nivesh Ke Funde. On this edition, we discuss the different kinds of risks involved in mutual fund investing. Listen in.
Welcome to another edition of Nivesh Ke Funde. Avan, whenever we invest our hard-earned money, we always analyze the risk versus the return.
Absolutely. Every investment avenue has some risk involved. It's just about knowing the level of risk and whether one's actually comfortable with that.
So today, let's talk about the risks involved in mutual fund investing. While they do provide a plethora of assets to invest in, what are some of the key risks that mutual funds carry?
Well, firstly, it's important to note that mutual funds do not guarantee or assure returns. This is because some of the risks that they are subject to are market risks.
Equity mutual funds are investing in stock markets, and the markets are inherently volatile. So inadvertently, mutual funds also face the risk of being impacted by market turmoil.
Another risk is concentration risk. When most of an investor's portfolio is concentrated in a particular sector, if anything impacts that sector, it will adversely impact the investor's portfolio.
That's why it's very important to diversify one's financial portfolio and not have all of one's eggs in one basket.
Another important risk that mutual funds face is the interest rate risk. When interest rates increase, debt mutual funds usually get impacted negatively.
Then there is, of course, the liquidity risk. If, due to some reason, a financial asset is no longer easy to sell as before, it reduces liquidity of that particular asset and realization of fair price becomes less likely.
And further, there's also the credit risk, which is when the mutual fund scheme has invested in a fixed income security and there's a default by the borrower or a downgrade in its ratings.
These are some of the main risks associated with mutual funds. But we must always remember that the great investor Warren Buffett says about managing risks.
Yes, he famously did say that risk comes from not knowing what you're doing. So it's important to know all the risks and then invest.
That's all in this edition of Nivesh Ke Funde. See you next time.